Thanks, Kaylee, for that update. Right now, we're going to welcome on our next guest. We have Bryan Corbett, VP of e-commerce over at Kenco. Bryan, thanks so much for joining us this morning.
Yeah, thank you. Thanks for having me. A pleasure.
So, Bryan, there's a lot going on in this space. I mean, we're looking at the upcoming holiday season. We're looking at variables of inflation and, of course, inventory levels. What are you really anticipating going into this holiday season?
Yeah, so I think that this year, especially for the D2C brands that we work with, they're dealing with something they've never had before, which is a ton of inventory, right? These are growth companies who are used to blowing out forecasts. And what I'm seeing this year is, for the first time, really having to sharpen their pencil and figure out, hey, how do we get rid of our excess inventory? So some of the things you're hearing about with Target, Walmart, some of these big retailers, that is the whole way down the line. Warehouses are filled, inventory is a problem. The story of retail, if you will, right? So I think that a lot of the smaller mid-sized brands who have had huge successes growing within the 3PL network, for the first time, they really have to have either a reverse logistics strategy, a liquidation strategy, a pricing strategy. So we're working closely, helping these companies figure that out.
That pricing strategy and the liquidation strategy, because for a big box retailer like a Target or a Walmart, they can kind of eat that cost, right? They can factor that into the way that they're doing business and let it eat away their bottom line without necessarily a ton of large consequence. But some of these smaller D2C companies, these smaller D2C brands really have to be careful and cautious about where they're choosing to make those cuts, because a little bit into their bottom line ends up being a lot on the other side of it. Can you talk a little bit about some of those price mitigation strategies for the smaller companies who are having to take a really close look at this and what they're choosing to make sacrifices on?
Yeah, no, that's great commentary and a great question. So it's interesting. I think that there's two different ways to look at this right now, especially, inflation, 9.5% year over year, just the CPI, right? And one of the things that I'm seeing in the marketplace is who's absorbing that right now, and so sometimes it's a 3PL, sometimes it's a company. I haven't seen quite getting to the consumer yet. And so I personally think that there's going to be a lot of, especially in the commodity side. So you talk about the strategy for the different brands they're not used to, excess inventory. Well, what you're seeing the same thing in retail where, Lulu and Costco and these giant retailers are posting crazy earnings, right? The high-end consumers hasn't been affected by inflation, right? But then, the other guys who are targeting, the lower-end consumer are having problems. So that's the same in the e-com space where you have a D2C brand, maybe on a commodity side selling, less expensive apparel, household goods, whatnot. I believe that a lot of them are going to have to raise their prices while simultaneously getting rid of inventory, which is a huge problem. So we don't ever recommend. We're not in the business of telling companies how to run their business. What we try to do is provide ideas and best practices, whether it's raising prices in the places that they can. A lot of cost mitigation strategies are, diversifying carriers, diversifying parcel. Brands are really hesitant to raise prices. And I'm telling you, I have not seen that hit the end user yet. I think 2023 and beyond, you're going to start to see a huge lag with increase in prices on the commodity side. So if you're selling a product in the e-commerce space, maybe less than $20, $25, $30 or whatever that lower end segment is, you're going to see probably some increase in prices. Whereas the higher end retailers that we work with, they're able to donate and do other things to get rid of excess stock and not hurt their bottom line. So, again, we're not necessarily recommending a specific strategy to get rid of excess inventory, but we certainly do recommend working with your partner, working with your warehouse supplier, your 3PL, figuring out creative ways to maybe store your product. So, a lot of times it really just depends on what you're selling and where you can put it, and if it has any value long term. But, it's a precarious spot to be in for sure.
Bryan, definitely a lot of variables outlined there. And I think one that seems interesting is really a lot of retailers and outlets pushing out inventory to make room for timely or seasonal inventory. And I think of places like Kohl's and things like that, looking to just try to get rid of a lot of goods, maybe at a lower price and not really hit their bottom line. You mentioned donations and things like that. Do you see any type of inflationary pressures building up on expedited freight really needing to get put or pushed into place in order to be in time for some of these seasonal trends, in order just to get out into the right time frame?
For sure, yeah. I mean, there's downward pressure and almost across the entire channel, and so if you're talking about on the parcel side, there's downward pressure to free up space for a new product, but then then you have to look at your cash flow. I mean, you've seen that with Bed Bath and Beyond, right? Like some of these giant companies are having major problems. So it's the idea of prices, inflation going up and productivity going down at the same time. There's a major issues, and I don't think that the e-commerce space has really absorbed it all. And you commented about the lag time. It's hard to say. It's hard to define how long it will take. But I do think that there's pressure. That's a balancing act. Pricing and throughput is a balancing act. So I think that the best thing to do is to throw darts in a sense of try a few different things out, absorb what you can, but then make sure you have a healthy balance sheet to buy new inventory for the spring, because retail is especially on the apparel side. I'm assuming that's when you're talking about Kohl's. It's cutthroat. It's aggressive, and you don't want to get caught holding the bag, right? So it'll be interesting to see what happens.
So for a lot of these retailers, specifically e-commerce, and if we're talking retail, we're talking about some of these brands who popped up maybe during the pandemic because it was very opportune for them to maybe either start something that was drop shipping focused or start something that was a little bit more D2C. They had this really good opportunity because everybody was shopping online. And we know that not everybody's going to be able to survive now because the market's going to be so much tighter. Do you have any suggestions for people who are maybe looking to kind of weather the storm on what they can do? Or do you think that it's just going to have to be kind of a sink or swim mentality? You're just going to have to get tough to make it through?
Yeah, no, sink or swim would be the easy answer, right? I think the more difficult answer would be to try to, as it always is, diversify your channels, figure out what kind of brand you want to be. I mean, the companies that did very well in the pandemic are also the companies that have a good product, most likely, and have a successful brand, and so they're going to do well in the future. What I'm seeing though, the big change has been the Facebook algorithm, the iOS change that happened a year ago. That a lot of people kind of thrown it under the rug, but there's no longer this spigot where the brands can just say, we're going to spend X and get Y. So these companies that are that would be a piece of advice, is to really have a look at your SEO, have a look at your marketing spend, especially if you're AdWords driven. You want to be, tweaking that and quote, figuring that out, right? That's been the major change. What I've seen is companies who have gone, they're forecasting X and they're doing half as much, or that during the pandemic they were tripling their forecast, right? So I would say take a look at your ad campaigns, take a look at your algorithm and what you're spending, your cost per acquisition. These are all little things that you should be doing all the time, but of course, when times are booming, it's easy to overlook certain things. It's easy to overspend on marketing and budgeting. But now everybody is pulling back a little bit. I would definitely look at different ad spaces, different marketplaces. I'm seeing a lot with YouTube campaigns and TikTok videos. And again, this is just the evolution of running a company. Nothing new under the sun, if you will, right? It's about diversification and figuring out how to differentiate yourselves. But I do think over the long run, successful products, successful brands, always kind of rise to the top, if you will.
Awesome, Bryan. Thanks so much for joining us this morning. This is an intriguing topic, and I'm sure we could go a lot longer. So we'll have to have you back and continue this conversation a little bit later.
All right. Thank you. Thank you very much, guys. Appreciate it.
Absolutely. Right now, we're going to head on over to Isaiah Buchanan. He's got a look at what is trending on social media this